Hi, welcome back. In this video we're going to look at how do you manage your checking account to make sure that you have as much money in your account as the bank thinks you do so that you can avoid problems like NSF fees and bounce checks. And so the first thing we say is it's extraordinarily important that you keep track of the checks that you write. And typically in a checkbook, you get what's called a check register, which is where you would keep a record of all of the transactions that are going on in your checking account. Either deposits like paychecks or other forms of cash that you receive, that is deposits that you make into your account, which is adding to your total, and any sort of withdrawals or checks that you might have written, payments that you've made that are taking money out of your account. And you need to keep very careful record because you can't rely entirely on the bank. And you'll also find out as we talk here that the bank sends you a statement every month that tells you what they think you have in your checking account, but there's a lot of activity that's going on after the statement is sent that the bank doesn't know about yet. And so having an accurate register helps you make sure that the bank's records are as accurate as your records are. Anytime you find a difference between what you think you have in your account and what the bank thinks you have in your account, you need to report that immediately and try and work that out to find the truth behind your account to make sure you have as much money as you think you do. As I mentioned before, your check register is where you put all of the transactions and where you keep what's called a running balance. That is, how much money do I actually have available to me? And as you can see in the graphic, you keep track of your payments, in this case to the electric company or to a friend or to Netflix, and you're keeping track of your deposits, that is money you're receiving, like a paycheck from your employer. And you are keeping track of your balance and either subtracting payments or adding deposits to keep a running total of how much money is actually still available in your account. Then every month you need to do what's called reconcile your checkbook. That is, make sure that what your total is matches what the bank's total is. And the way to do that is to take your monthly statement from the bank and look at the activity that has happened after the statement and add in all of the money you received after the statement date that the bank does not yet know about, and subtract all of the payments that you've made that the bank does not yet know about, and see if the answer you get from the statement and all those extra activities that they don't know about yet equals the amount that you have currently in your checkbook. And if they are the same, then your checkbook has been reconciled, which means you and the bank both agree on how much money you actually have. So how do you do it? The process is relatively simple. The first thing is that you have to make sure that you have an accurate balance in your register. So you might have a register that looks like this with a variety of different transactions, some debits, some credit, that is some payments that you've made and some payments that you have received, and you end up with a running balance. In this case, our checkbook has a balance of $378.26. And you'll notice that the dates for some of these activities are at both the beginning of the month as well as at the end of the month. So we have these three activities: a paycheck received, an allowance check received, and a payment made to Johnston Photo, all of which occurred between November 17th and November 20th. Those dates are going to be important here in just a second. The reason that date is important is because when you receive a bank statement from your financial institution, they're only able to tell you what's happened in your account up until a certain date. So in this case, our bank statement says we have $165.16 in the account as of the beginning of the month. At the end of the statement, the bank believes we have $313.26, but that is as of November 15th. There are transactions that we have made since November 9th, which is the last date the bank knows about, that have affected our account. When we look back at our check register, we see that we have way more money, we think, than the money that the bank thinks that we have in our account. So we need to do what's called reconcile that account to make sure that if the bank knew about what's happened in our account, that they would come up with the same number that we did. So that process is relatively simple. first step is to take the amount that our statement says we have. In this case, if we go back and look at the statement says, as of November 15th, the bank believes we have $313.26. And so that's where we start with. We would then add up all of the deposits that we've made since the statement date. So since November 15th, how many deposits have we put into our account? And if we go back to our check register, we see that we've made two deposits, one for $120 and one for $45. So that totals $165 worth of credits to our account. And so we'd enter that in here for step 2. And then let's go ahead and add those two numbers together. And it's telling us that if the bank knew about our deposits, that we would have $478.26. But we also wrote some checks. And so we need to go back and look at all of the checks or other withdrawals we've made in our account since the statement date. In this case, we look and we see that there was one check written since November 15th, and that was to Johnston Photo for $100. And so we need to go back to our reconciling worksheet and add that $100 to line 4. So right now, if the bank knew about our deposits since the statement date, we'd have $478.26. But we also wrote a check. So if the bank knew that we had written this $100 check, how much money would be left over? So we would take this number from line 3 and subtract the $100, and we'd see that if the bank knew about all of the transactions we've made since the statement date, the bank would say we have $378.26. And if we go back to our check register, we see that we also believe that we have $378.26. So in this case, our check register and bank statements are reconciled because we both came to the same amount of money in our account. This process of reconciling our checking account is extraordinarily important. It's not very difficult, but it's extraordinarily important because we need to always make sure that what we think we have and what the bank thinks we have are equal. Otherwise, there's a significant problem on one end or the other. Either we've made an error or the bank has made an error. And if the bank has made an error, that's a very, very significant issue because that means they're losing money of yours or they're giving you access to money that you don't actually deserve. And once they find that out, they're going to want it back. And you don't want to be in a position where you have to find extra cash that you have spent that you should not have ever had access to. So this reconciling process is important, and it's necessary and something that you should do from month to month to month. We're going to have a little bit more practice on how to do this and to make sure that we have this important skill mastered.